What's going on, guys and girls? Welcome back to another episode on the Falcon YouTube channel. Thank you so much for joining us on this episode. We're going to be talking about timeframes. What is the most effective timeframes to trade the markets? We get asked this question a lot. Mark, is it the daily? Is it the 1 hour? Is the daily more important because of this? Is the weekly? Is the institutions used in this time frame? The list goes on and on and on. I hope that this video gives you more of a holistic approach as to, it's not just the time frames. There is no holy grail. However, what is more important is that how you use those timeframes together collectively, top-down analysis, which we'll get into. I'll show you some examples. Here I've got Euro, New Zealand dollar, I've got Kiwi CAD, and I've got Pound CAD. So I hope this gives you a very, very nice insight as well. And before we get into that, one thing I want you to think about is this. The lower the time frame you go, the more margin for error. You can take a lot more losses. You're too zoomed in. We'll get into that part as well. And just understand the time frames you should be using should be congruent with not just how you want to trade, but your strategy as well, of course, has to be congruent with that. But think about the long term. Let's say, for example, you're trading, but you have to be constantly on the 1 hour or the 5 minute on the lower time frames. What happens when you become more busy? What if you have a demanding job that you really actually enjoy and you're using trading as a second source of income? Well, you may be more of a swing style, which the great thing is about what we do at Falcon. We get asked this question as well. Is it short term? Is it only long term? Is it medium? It's all of it. You can trade short term, you can trade long term, you can trade medium term. It's all about what suits you. Some people in Falcon will only take trades on the daily and the 4 hour because they're more of the longer term. They don't have the time. They have very, very demanding jobs. And they understand that by not getting in on the lower time frames, yes, the risk to reward may not be as big, but they can still profit. They can still make it suit them. So I want you to think about it all holistically, but we'll get into it. Starting off with Euro Kiwi. So what I want you to think about is the higher the time frame, the more important. However, this has often been, drilled into us for a long period of time as to look at the monthly, then look at the weekly, then look at the daily, etc. One thing you have to understand is that I'm all for top-down analysis because that's how we look at it. These are the time frames we use: weekly, daily, 4 hour, 1 hour, and 15 minute. There you go, right? So these are the time frames that we find most effective for precision. However, the weekly time frame, so each one of these candles right now is making up the weekly. Whatever is happening on the weekly candle here is happening on the daily, happening on the 4 hour, happening on the 1 hour. It's all happening. It's just more zoomed in. We're just going down a degree. Now, sometimes when you're looking at the weekly candle shape formation, it takes a long time to play out. So let's say that you're looking for buy setups with Euro New Zealand here. We could look at this on the weekly and say, right, lovely rejection, we broke the low, we caught people on the wrong side. We're looking for buys, longer term. This can take a long time to play out. So if you don't know how to use all of the time frames together, it can become tricky. And then again, you could still lose. So you need to know how to work all of them all the way through. So let's work our way back firstly. So we'll start off with Euro Kiwi. This was a trade we was looking at around this time. Let's take it back to around, we'll go here. So Euro Kiwi, we was actually looking for some sell setups, and reason as to why, again, starting with the top-down analysis. So on the weekly chart, if we just draw simple channels, this is not majorly important now, but this is just to look at the overall range that we're in, right? So we'll be looking at Euro Kiwi like this, looking at that big move to the downside, which we would call as an impulse. And then we would be looking for any patterns around here that gives us the indication that we now want to look for sell setups. So as we go to the daily chart, so I've started on the weekly. Now remember, if something's not visible on the weekly, it may be visible on the daily. So work your way down. Top-down analysis is going to help you build the picture. So the higher the time frame is the overview, the bigger the picture, and then a lower time frame, essentially in layman's terms, higher the time frame is the bigger picture, and as you work your way down to the lower time frame, it's pretty much for entry. So for us, we trade patterns, as you know, in Falcon. We're looking for the 1 hour and the 15 minute mainly. Like I said, if you have a little bit more of a swing style, you may use the 4 hour and the daily, but the majority of us, we're using this. So with Euro Kiwi here, what would we look at? Well, we would see, right, we have an impulse, we have a corrective structure. We're looking for this continuation. We have a lot of room to the low as our first target and then second target. So nice and simple. Simplicity is really, really key for us. So we would be looking for this. Now, a tiny little bonus tip. For those of you that trade patterns, you would have seen maybe previous videos, and definitely go check them out if you haven't, where I talk about impulse and correction. Now, all this simply means is that what we're looking for in the market is impulse, correction, continuation. You can follow that structure, or we're looking for impulse, correction, continuation. To the upside, to the downside. These are continuation patterns, and we're also looking for reversal structures. Now there's specific patterns that we use. There's so many patterns in the market. You don't need to know all of them. Otherwise you'll give yourself a headache. Just know what's effective. So with this, using the simple mechanics of impulse, correction, continuation, we can see structurally this type of pattern, we're looking for downside, right? But we've identified that from the weekly all the way to the daily. So I'm working my way down, and I can go, right, 4 hour. That's where I can start combining candle shape formation involved in that. And then we can start drawing on the patterns that we can see that are visible. Now, what you would normally learn within pattern identification is you would see this picture perfect channel where it just lines up on everything. But the reality is the market will break just above, just below, and you have to know how to deal with these structures, but that takes time and experience. You need to know what you're doing. Patterns has been a big thing for me from literally day one. So even when I started off with stocks, it was always a big thing. So a bonus tip here is this. If you're a pattern trader and you're looking at something like this, you would measure, just literally take a trend line, measure the impulse. We could agree that from here to here has been this impulsive run. Then from the top of the pattern would be your first target, which mathematically happens to line up pretty much there. And then you would look from the bottom of the pattern, and we're looking for price generally supersedes that, and it's then very close to this low. So mathematically, tiny little tip that's going to help you out. Go and test that, by the way. You'll see this on multiple time frames on multiple pairs, so go and do that. So what we would do is this. We've gone weekly, daily, 4 hour, nice and simple, and then we can see our pattern that we're looking at for sales. And then we understand, right, we're either going to sell from here or we're going to create more of a complex channel and then still look for downside, so it doesn't change the bigger picture. So as you can tell here, if you're a beginner coming into the market, nothing has changed for us as we've gone to the lower time frames, because the higher time frames have already established we're looking for moved to the downside. So if we go to the 1 hour time frame, right, we're working our way down. Already entry points would be up here, here, here in our strategy, and be more forming as well. But let's just play this out a little bit further. So we just play this using the bar replay tool. Right, so price is correcting, so we've gone back up, another entry up there. As I was saying, creating more of a complex structure, right? So all in all, you can see, there you go. So that was the first one. So remember what I said about measuring this, using this time frame, and then utilizing that to your advantage. From the top of the pattern, it's then hit that, and pure coincidence, it gets people caught on the wrong side before it starts to short-term move to the upside. That was the first target hit. We don't always have to hit the second target, but that's the first target. But all in all, you can see we've used all of the time frames all the way through to capitalize on that. And that's just been a complex structure. So let's say you're wondering, Mark, well, what's the best time frame? Well, if we worked our way down to, let's say, an entry from here, take a typical trade there, call it an average, in terms of stop size, sometimes it's 50, sometimes it's 30, sometimes it's 15 is normally the lowest we go. And some people that are a bit more aggressive might go a bit tighter, but we don't recommend too tight just because of spreads and things like that, and just taking multiple losses. But let's say you set that trade out here, first target for a 20 to 1. Right, on the 4 hour, as you can see there, we're utilizing the bigger picture, then to the daily, and then you can see that pattern just using simple impulse, correction, continuation. First target met, second target here. So all the way through, weekly, daily, 4 hour, 1 hour, 15 if necessary, right? Because on the 15, all the 15 is just more precision. Like you can see, more precision here, but we're following the same principles, right? We can see trades here, here, all the way down, right? So it's just utilizing those time frames. Now remember, if you're too zoomed in, let me just delete that. If you're too zoomed in, you can be like this, where you don't know where the bigger picture is because you're so focused on, let's say, you see some sort of pattern here, think, right, I'm gonna buy that, I'm gonna buy that, and then short term it starts to go up, and then it drops here, and you think, oh, how comes this has now moved against me? Well, you're so zoomed in, you're not holistically looking at the bigger picture. Well, then if you go back to the 1 hour, this is what I want you to be thinking about with your time frames. It's not the best time frame, it's how you're using the time frame. Because then when we zoom out, we can see, well, why would you be buying there? If, again, I'm just gonna go all the way back to make the point. Why would you be buying there? So you see how when you're too zoomed in, you're trying to buy up there because you're zoomed in on the 15 minute or the 5 minute or lower time frames thinking, right, there's a trade. And then you get caught off guard because you haven't zoomed out and look at, well, hold on a minute. This is actually a big impulse. There's a big correction and we're looking for continuation. But then on that last part, you're literally on the 15 minute, like so zoomed in. And the crazy thing is short term, it can work out. So if you start to, let's say, buy here, because you didn't factor that in, let's remove that. Let's say you're not looking at the price pattern and you're merely focused on this. You would just go, this is more aimed at beginners, of course, amateurs that do this, but they've got lack of experience. Let's say you start buying here, you start thinking, right, I can get involved in that. Perfect. Start trading that to the upside, and then you try and trade this one again. And then short term, it starts to work out. But where do you bank the profit? There's no structure to it. There's no key thing. Unless you've just gone, right, I'm going to make 30 pips here and there, which again is just very, very short lived. Before you know it, price comes crashing down. Then it starts moving to the downside in the state of the continuation that we was looking at. So remember, that I showed you on that bigger degree of that big correction is just happening on the lower time frames. And then all we're doing is assessing what does the bigger picture tell us and then working our way down. So let's just remove this, going back to recent price. So as you can see, hit target 1, target 2, just by using that simple technique that I showed you. Just gives you an area to judge where is it most likely to head. So now price action achieved, target 1 and target 2. We've got people caught on the wrong side of the market, which is the mass psychology. And now we're starting to look for upside once we get confirmation. There is no confirmation just yet. It's just most likely to happen in these areas because we have the pattern as well. And as you can see, after this pattern happened, what happened again? Same structure, right? And if we measure, again, this impulsive run to the low, and we look at it from the top of the pattern, where have we got? All right, let's just get that in to random ray line there. As you can see, just pierced it, utilizing, all I did is measure the impulse to the low and to the top of the pattern. They're rejected. Mathematically, we hit. Same thing. So we are not looking for sell setups in these areas because we've already seen the run and the same continuation. So let's say, for example, we're looking for target 2 because we see we've already achieved that. And if we go, again, daily, if you can see this on the daily, as we can, we're looking for impulse, correction, continuation, utilizing the higher time frames, right? I'm going all the way down, then I'm going 4 hour, right? What does the 4 hour tell me as I work my way down? Well, I can see we've got a very clear and obvious pattern here that we focus on at Falcon. And then I'm looking for a trade after we broke that area there, right? So 4 hour paints a picture, 1 hour, we'll start to paint a clearer picture. Again, we're not going to go into the exact entry criteria, but I'm just working my way down. So you see how visually the higher time frame's already given me the bigger picture. And then I'm likely to get in here, right? Probably about 35, call it 35. The stop size at this point is irrelevant. I'm just showing you the overall build to it. So then I go back to the 1 hour just to look at the bigger picture. So again, all this is just clearer as you move the way down. Impulsive run, corrective structure, continuation, same thing over and over again. And then what we'd be looking at is the next target. So you can see the bigger picture shows us we've got about a 19-to-1. Will we just get there all in one trade and hold the whole thing? Maybe not. Sometimes we do it in stages. Sometimes it pulls back. That's a whole other ball game when we get into management. Another side of it is actually scaling into the move as well. So it can be very, very profitable. But you have to know how to use these timeframes all the way through. So hopefully that gives you more of a perspective as top down. Now, I've been very, very brief on the strategy side of things, but as you can see in the simple mechanics of it, all I'm doing is going weekly, daily, 4 hour, 1 hour, 15 minute. That's it. No need to overcomplicate it. That means I can capitalize short term, medium, and longer term. I can do it sustainably. I can do it at scale. And I have a trading plan that I can follow every step of the way. And it's systemized. That's what you want to do. You want to have your rules in place and you know what you need to do. So that's Euro Kiwi. And just really quickly with New Zealand CAD, now going a little bit faster from what you've learned. And I appreciate if you're a beginner watching this for the first time, you know, this is more about the time frames, but I'm giving you some nice little bonuses here as well. So make sure that you do pay attention to this, because this is going to be super handy. So as you can see on the weekly time frame, something more live that's happening right now. Rejection, rejection, rejection. And if we just go back to the previous just couple of weeks here, there we go. High time frame structure, lovely high test formation, 1, 2, 3, triple top, ascending formation there that we're looking for downside, first target, and then second bigger target, but that's more of a longer term move. So as you can see, the weekly paints the picture for us. Then what do? Multi-time frame analysis, top down. We then look at the daily and see, okay, perfect. So the daily is giving us a clear indication that we're moving to the downside. Brilliant. 4 hour. 4 hour is where you normally see the clearer, bigger patterns, but as you can see, big channel there, looking for this to sell off and hit this as a first target. Whether this hits this target and then moves back up, that remains to be seen, but that's the first target. So we'd work our way down, even from higher up, right, we'd be looking for moves in this area after we start to break these structures. After we start to break these channels, we're looking for price patterns in these areas, here, all the way down, looking to take advantage of them. And then again, a lot of the times what we will do is that we will look at a 1 hour structure, and then we'll use the 15-minute just for a bit of precision, if it's relevant in the right area, to just time our entry better. That's it. And if we start to just play that out, and then let's play out a bit faster. So again, see how it reacts to the channel first. I can't even remember exactly where price is, but we've played it a little bit. Right, so first clear target, and we're looking for further continuation. And this low as well. So we'll see how it reacts to that low. Got very, very close. And we're just still in this area, so we're just forming the same thing that we've been looking at. So if we then go back to the daily chart, higher time frame, typically, once you do your weekly analysis, so a nice little tip here as well, once you do your weekly analysis, that's good to go, right? The weekly is going to take a long time to play out. Where we do most of our analysis after that, after you've analyzed the week on the weekend for the week ahead, it's then right, daily 4 hour, 1 hour 15, daily 4 hour, 1 hour 15, and then you're just fluctuating between those time frames. That's what's going to help you. So now daily, we already see the bigger picture. We're then looking for lower time frame confirmation for this to continue. And if we don't get it and price starts to move to the upside, then no trade. We have plenty to choose from. We don't force things. We don't force the market to have to do something. We just play a probability and an edge game. So what we'll be looking at is for a bigger pattern there, same type of structure that I showed you on Euro Kiwi, and then looking for further continuation. Then what would we do from the tip that I just measured last time? We would take this, and then let's say that is the top of the pattern, that would be target 1, and then on the break would be target 2, right? So, and that would line up quite nicely with these lows, because typically it supersedes it. So that makes sense mathematically as well. So that's what we'll do, that's what we'll wait for, and then we're using weekly, daily, 4 hour, 1 hour, and then 15, multi-time frame analysis. But like I said, weekly at the beginning, once you know the weekly time frame, you don't need to just keep going to it. You know, that's the bigger picture, that's the overview. Lower time frames, then you just work your way down for entry. Pound CAD, right? We're looking for the same thing, something a little bit more live as well as to what we're looking at right now. If I went to the weekly time frame, how would I do it? I would do the same thing. I would see this bit of price action right now is showing me that pound CAD is likely to sell off to first target, second target. Target 1 and 2, nice and simple. Weekly time frame, that's good. That weekly's not going to change. That weekly's happened, that's given me the indication. I don't need to keep revisiting that. All I need to do to keep it simple, so you've got less time just constantly on the charts, which you don't need to be. You don't want to go from being an employee to then an employee to the market, right? You're a slave to your job, and then you're a slave to the market. You want to create a system that is fun, enjoyable, sustainable, right? What we do is sustainable. And when we're looking at it here, rejection here, we know the weekly time frame already, then we're working our way down right. Let's see what the 4 hour is showing us. We can see, again, clear pattern structure, move to the downside. Like I taught you, impulse, correction, continuation. Impulse, correction, continuation. Impulse, correction. We're looking for continuation. And if we was to measure this, even just a simple move there, right? There's the impulse, then we're looking at that, right? what do? We create the same length of impulse before we start a correction again. So wherever the top of this pattern is, whether that be there or it's not finished yet, let's say it is there, we can see where is it likely to then pull back. Well, likely here, create another correction, and then move its way down to target 1, and then the bigger target of the overall bigger pattern that we focus on. So you see how it's nothing crazy, you know, with time frames. So when people ask, what's the best time frame to use? My question is that, firstly, how much time do you have in front of the charts? What job do you do? What type of trader do you want to be? And do you want to do this, be sustainable with it, right? Do you want to be a sustainable trader, or are you just trying to catch a few pips and think that's going to solve your problems, right? So we're just working our way down, right? We know the structure, we've just analyzed that. Then all we do is we map out, right, what meets our entry criteria? And of course, that will be our strategy. Sense of direction is one thing, capitalizing it on another, management is another, psychology, which is the biggest part, which is another as well. Technicals can be taught to anyone. Timeframes can be taught to anyone. If you haven't got your psychology in place, it's going to be very difficult for you. So please make sure that you're not just fixating on timeframes here. So as you can see, nice and simple, not overcomplicating it. This is a very, very profitable pattern that we use, but you need to know how to deal with every step of the way to capitalize on that. And yeah, that's all the way through. So hope you enjoyed that lesson on timeframes, what are the most effective timeframes to use. Well, for us at Falcon, weekly, daily, 4 hour, 1 hour, 15. Can you use the monthly timeframe as well? You can, but the reality is it takes such a long time to play, even the weekly at times. My favorite time frame, if you're going to ask me, would be daily and 1 hour. Always has been. Daily gives a very, very clear picture, 1 hour for entry, and then you almost could couple the 1 hour and the 15 together because we have precision as well. And I've also been testing something on a slightly lower time frame, which I'll be sharing for the Falcon community very soon, to just tighten up those entries with the current market conditions even further. But I hope this has given you a valuable insight as to not just what timeframes we use, but the holistic view. You know, people searching on YouTube, they're looking for, right, what is the best time frame for me to learn how to trade? And yet they think that if they find someone who knows what they're doing, that as soon as they know the time frame or the indicator that they're using, for example, that's what's going to help them. But it doesn't work like that. It really doesn't, guys and girls. You need to know how to do top-down analysis all the way through and understand the lower the time frame you go without experience and strategy, more margin for error. What you want to be doing right now is not squeezing profit from these timeframes. You want to gain consistency. Listen, once you've got consistency in the market, you can then build on that and you can refine your entries. You can go back over your old trades and see that, right, I could have actually refined it on this time frame. I could have actually had this stop size. I've noticed a consistent pattern in my trading that if I could do it on this, I can then refine it. Build consistency first, because what you want to do, and again, another bonus tip before we finish up, you want to first and foremost build the habit of being a consistent trader. Build the habit and confidence of actually taking winning trades. Then you can go back and say, right, could I have refined that entry? Could I have refined this entry? Oh yes, I could. Right, so next time, now you've built the confidence, you can go wider stop loss at the beginning to build the habit, and then you can refine. Far too many people are going the other way. Why? Greed. Greed. What's the lowest time frame I can trade? Oh, if I would have got in there, I would have made 50%. Greed. The very thing that you're searching for is the very thing that will destroy you, because your psychology, I can already tell, is all over the place. Build the habit first, use multi-time frame analysis all the way through, and that's going to help you massively. Let me know what you took away from this episode, and make sure that you do like, comment, and subscribe. Share these videos with people that really need it. We really appreciate the support. This channel literally wouldn't be where it is. I can't believe how fast we've grown. And it's all because you just turn up every single week. It does not go unnoticed, the support, and that's why we're always working on more things to provide more value to you, whether that be technical related, mindset related, psychology, whatever it may be. I hope you've been enjoying it and it's been helping your trading journey. So let me know in the comments, actually, what did you take from this video? I know we spoke about timeframes, but I did add in a few little bonus things as well. So let me know your #1 takeaways from this episode. I'd absolutely love to know. And for those of you that haven't checked out recently, we do have some free training. So check out in the description. We've got some things that I go over, and I've spent a lot of time on that, and it's going to be very valuable if you haven't checked that out already. So guys and girls, enjoy the rest of your week, morning, wherever you are tuning in from. I really do appreciate it, and I'll catch you in the next episode. Take care, everyone.